What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for December 6th, 2022. So that sounds like something you're interested in. Consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So SPX, something I talked about coming into this week is essentially I thought the market would be pinned. Essentially going right into monetary policy and going into core inflation next week. And that's exactly what we're looking like we're doing. I actually would not be surprised if we just hover around here and not even really move until next week. Again, this is normally a really dry spell in a normal cycle. There really isn't a lot that goes on here. There's low volume, so even the slow melt off we had today was extremely slow. It was not fast. Because the volume is just low right now until we get Q4 earnings, which again is right around the corner. We got roughly about a month out from there, a little over a month before we start seeing those earnings. But what ultimately matters is, again, core inflation and monetary policy next week. Now, I do believe monetary policy will fall in line. But again, that heavily depends on core inflation. I think core inflation will either come down a little bit from where it was and potentially even come close to around where it was. I don't see a big drop in inflation. I think you're going to need time with the current rates in which that they are, understanding that you're causing this demand destruction as long as the rates remain at where they are, and they're not going to dial back for a while. So just be mindful of that. And something that Kathy Woods has talked about for a while. Many of other people have reached out to the Federal Reserve and said, hey, you guys are getting way too carried away with these rates. And we're seeing the impact it has on the market with the layoffs and the savings rates being depleted. You have to understand that, yes, inflation was bad enough to where people dug into those massive savings that we had. We had, again, that just a year and a half ago, people were at 33% national savings rate, which was absolutely crazy, and then dipped all the way back down to 2.4. So it just tells you where we're at and what's going on in this current state. So even though inflation may be down, people had to spend all their savings to keep it remembering where it's at. So now we are living off of credit cards. We are liquidating assets to stay afloat. I think the jobs numbers are very misleading in what's going on there. People may be working multiple jobs because rent has increased quite a bit. Again, the bigger family you have, the more it has increased. For every room that you have, it's gone up a couple $100 on top of everything. So with that being said, again, things just are not looking bad for the consumer. And my shift, again, is going on to the consumer now, unless something changes with a core CPI. If something changes with the core CPI, then we have that battle again. Then you bring all that fear and panic back. And I think we are still waiting. I think the bigger catalyst that's about ready to play out is going to be here in the next couple of months. Now, a lot of things that I have been trying to predict further down the line have actually come a lot sooner. And so even though I say around that springtime area, roughly is around, again, that normal sell-off cycle is around March, beginning of March, we have to understand that they may be moved up. It depends on, again, how long the consumer can last to this point and continue to liquidate assets. Again, something I talked about in the weekly update is that you get Redfin's flipping business going out of essentially having to shut that whole division down, right? You have a lot of the other banking, essentially it does home loans closing down. So you're removing a lot of liquidation from the market, liquidity from the market, excuse me. And so that does not help. And so these people running off of severance packages, can they hurry up and get back to work? I think some people are to an extent, but again, the overall masses is what's going to matter. And again, leading back to the unemployment last week, there was 100,000 people unemployed over what was expectation. So, which doesn't really add up to the non-farms. But with all that being said, again, the statistics on the earnings with the credit cards and what's going on in the world, there's a bigger catalyst that's about to really unfold, and I don't think we've really seen what a recession could be about. I think that this is the preliminary into what it's going to happen, to the bigger event that's about to occur. And the question is it going to cause a crash? And a lot of people are assuming, or maybe thinking maybe a crash, maybe not. It's really hard to tell if it's going to be a crash. But I think there's going to be, you can only price in so much, right? And I have never agreed with pricing in. I think the market moves to where it could assume a price in is. But again, something I've talked about all this year, and you can follow my videos, it hits a point where you can assume it's being priced in, but as soon as it hits that, it jumps. The market typically bounces after it hits that point. And you realize that when that event comes out, if it was correct or incorrect, it moves from that point from where it's bounced from. And again, if it was incorrect, it corrects back down to where it should. And so you have to understand that it's not always just priced in, that the market will correct. So right now we've taken a heavy hit, right? I think we've reached peak was about 26% correction on the year. This year's pretty much done. This whole year has just been a down year. And next year, I think we're going to start off much the same way. I think we could take a bigger dip. Again, it depends all the timing and how bad this catalyst gets, because you need this catalyst to play out. Once the catalyst plays out, then at that point, you're looking for the consumer to come back. And so if we start liquidating all these homes and then can't liquidate the homes and bankruptcies, right, that's going to destroy the market quickly, right? Like we've talked about, the market will go down quickly. It hit a specific point where it feels it is priced in. And then from that point, it will start, I think at that point, we'll start recovering. Then again, it depends on how quick the consumer comes back. And then again, the consumer doesn't want to hold on to cash. Can be king to an extent, but you have to realize that hoarding precious assets is not helping the market, right? This starts leading to essentially deflation, where yes, everything that you own is going up in price, but it doesn't mean anything if people aren't liquidating anything. And so you need that essentially that flow of money, right? And that is what causes growth, is people spending the money. This is why even though some people may not agree, but you need some sort of inflation to be able to stimulate the desire, right? And understand that the consumer has to have a desire to want to buy something, right? Like, okay, well, the prices are going up, so I need to spend now so that I can have it, because in the future it's going to gain value. So that's where I can see where inflation helps a little bit. Aside from that, things are, again, we're in a current waiting. We're in a waiting period, and I know it sucks, but there's nothing much more we can do from this point. We have to wait and see. And right now, the best thing you can do is study and learn about markets, study and learn about what's going on. DCA, again, not financial advice. We can still go much lower. I don't think we can't. Again, average is roughly about 43% correction, and we've only hit 26, so we can still go down quite a bit. Just be mindful of that. So that can happen. The question is, again, if once this thing starts unfolding, what is the bigger outcome of what's going to happen? But I do agree that it is at a good level to slowly be potentially buying, especially if you can afford to. If you can't, that's another story. I don't suggest you be purchasing assets that you can't afford to right now, especially because it's hard just trying to get that cash flow in the current market that's going on. So I'm going to go ahead and stop the rant there, because mainly this video is going to be mainly around the rant and the sentiment and kind of what we're looking forward to, because right now the market just really isn't moving a lot. And until next week, and again, if something changes dramatically there, that would require, again, essentially the headline and core inflation to be higher than it is, than it currently is. And I think if you start creeping back into the eights, you're going to bring panic. And then you don't want panic, because then I think we're going to blow straight through that 3,500. And I don't think we've seen a close to a floor yet. And then you start talking about a 43% correction on the market. If that core starts creeping back up like that. So you definitely don't want that to happen. And then that will definitely put a lot of strain on the market, and understand that you're only pushing the consumer further away. And that, again, the Fed is not the incorrect data, the missing data is what's causing the Fed to be like, okay, we can continue to just raise rates. Everything is fine. And understand that there is a very delayed reaction. It's hard to really gauge that just because of the way things are currently playing out. So again, really watching this. Again, I think we can just wedge into here until next week. I don't expect any big moves out of here unless one of the catalysts really play out. So kind of watching that. The dollar is actually interesting. The dollar needs to get rejected here if you want bulls to continue, which I think it could. But if it does not, the bears could start coming back very quickly. And again, I think for the bears to come back at this point, I think what you really need is the market just kind of in limbo right now. So what the market really needs is a catalyst to sell off even more, but there's no catalyst to keep buying either. So again, the consumer has to feel comfortable and confident to come back and want to invest. Institutions got to know what's going on in the next 6 months for them to come back and start buying up assets again, buying up equities. So you just have to be mindful of that. Bitcoin, again, it's been up and down, holding this level. It doesn't really look great on the higher time frames, to be honest. The weeklies, you're below the 200 on the weekly, I believe it was. But those study back up. Below the 200, try to retest it. Now you're below it. I think you can drop a little bit further. Everybody's saying the 12K, I think, is a good points to buy. We could get one more dip in Bitcoin, so kind of really watching that closely. As I think we could when we do sell off. It could be a lot. Oil is coming down to 77, which, I mean, it's still high, but slowly coming back down. Again, I think you see that rotation coming into February where you get that one last dip, and I think we can recover well from there. Will that be the ultimate bottom? I think it very well could be, but we just need that catalyst. If that catalyst doesn't play out, then you're kind of teetering on, well, when does that happen? And then you're just provoking more fear. You're provoking more people to stay out of the markets and wait until something happens. And then that's, this is your stunt growth and everything else from that point. So Tesla wedge break retest. Is this the retest and we pop back up is the ultimate question. Again, this is the weekly. We do need Tesla to get back over 188 by the end of the week. Could be a strong possibility. They had some news today essentially saying that they may be having to cut down on production in China because of the lockdowns and stuff that are going on there. You could see affect Apple as well. Apple did pop today because they were looking for essentially a new place outside of China, which I think is just recycled old news. They've been looking for a while. But nonetheless, they started selling right back off because of the fact that they will be affected on this particular earnings. It will depend. This is why the Q4 earnings will be interesting to watch because our safe havens are pretty much at risk right now. So we'll have to see how earnings do play out. But I do expect Tesla to do well. The question is how well will they do next year is the question. So they're very forward thinking and with automation and efficient with innovation that I think they've been able to show that they've been able to sustain themselves even through everything else. Apple again pulled itself back into the wedge here, so kind of looking for it to hopefully dip back down to the 137 is kind of what I'm looking for. I will buy back in if it does hit that. So watching that very closely. Again, I don't expect a breakout. Maybe I think we make one more last trip here before we start breaking out for Apple. So really watching that there. BA, again, absolute monster. It's just not stopping. It's starting to slowly get lose some steam here. Again, volume's been low, but if it can't break the 196, it really needs to pull back to the 168. So kind of really watching that there. The banks. Now, this is interesting. The banks are starting to kind of break down. The question is is actually going to break down and correct 50% to 122. Really need that. Again, I've been talking about this. This has been climbing. You don't want this parabolic move and not retesting old levels. Makes it harder to for this thing to keep going and build a solid bull structure to keep on pressing up. So really watching the banks closely. We could get a bigger dip towards the end of the week. So kind of really watching that there. BAC, again, all the banks are starting to turn over and finally starting to die out. It seems like it's taken forever for it to do that. So again, it would be interesting to watch moving forward here. But yeah, that's pretty much what I got. Again, it's going to be a pretty quiet week, in my opinion. Waiting for next week, setting up for next week. Maybe we do start selling into next week. Just be cautious. And then hopefully we get a 50-point basis move. Hopefully inflation keeps coming down. Is what we're looking for. We still want that gradual decrease in inflation, which I think there's some reports that are showing that it is coming down, which is good. Again, I said that before. It's great first steps, but again, it's all on the Fed. The Fed has to start taking rates off, and I don't see them doing that anytime soon. They're going to continue to increase rates, which is again another bad thing. And they've made that very well clear. They're going to continue to do that. So they have to try to essentially demand destruction is what's happening again there. And until that clears out, we're going to have to see where this whirlwind takes us. And it's going to be a long, drawn out process until something snaps. And then when something snaps, is a question: how far do we correct from that snap? Is it a crash? You rarely get crashes. It doesn't happen all the time. We just had a major crash. So I really don't expect like a huge crash, but I expect one more like big move to the downside, potentially make a newer low. And then again, it really just depends on the catalyst. And then we go from there and see how we take 2023. So that being said, if you made it this far, I appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys later.